Let's talk some charts. Stock market green, by the way. Oh, not the NASDAQ, but we got 3 out of 4 looking pretty decent. Kevin Green on the technicals, Jenny Horne on the tariff stuff. Walmart, TSM, JB Hunt. Who came up with this list?
I know this is a it's a good list, especially because I think there's very mixed right now conviction on what will be like tariff proof versus what won't be. Like yesterday, we did highlight that note from out of Kroger that said actually that was a recessionary maybe proof stock. I mean, it hasn't been over the last. Actually, I guess the chart looks okay. Walmart has been, I think, more and more compelling as of late. I think that Walmart's story has been one where they continue to dominate in like every aspect of their business. Like they continue to grow e-commerce. They continue to see market share stolen from some of the more high income targeting peers like a Target. And they continue to, keep their prices down. So as far as like a stock right now that looks defensive, Walmart absolutely does here. I know we've pulled back about 1% on the year, but that is a thing of beauty right now in the overall market, that chart. And we're up about 0.8% today. Walmart here is pushing Chinese suppliers to cut its prices to offset then these tariffs. This is according to Bloomberg reports. The company has not been able to back down from its request to suppliers to cut these prices by as much as 10% for each round of tariffs. So I will be curious to see how this, of course, directly impacts, like us as consumers. But they have done such a good job historically of keeping their prices relatively moderate. So that makes me have faith in this day as we go into right now a pricing environment that is fairly unknown still.
Okay. Did you read that article about how people are stealing from Whole Foods to stick it to Jeff Bezos?
What?
Did you see that? Yeah, Business Insider had a big piece.
I never understand
last week
because
they're lighting Teslas on fire and they're stealing from Whole Foods to stick it to Jeff Bezos.
As if he cares.
Well, I don't know. They think they might.
Well, I would be upset if someone was robbing the Whole Foods by us.
Yeah. Oh, I see people do it all the time, actually.
Well, maybe we should start. No, just kidding.
But the idea was like, all right, so then is it better to be Kroger or a Walmart? I don't know if they're stealing from there too. Kevin Green, how's this chart looking for Walmart?
Well, the chart has seen a little bit of a pullback, as Jenny was talking about, but it's still holding up the primary uptrend. And actually, if you kind of go back and look on a daily chart, it's been in this expanding megaphone pattern to the upside, meaning that there's a positive trend of price moving up, but also a greater volatility. Now, we did hit that 105 level, and we have broken down here. Now, what I'm kind of looking at is kind of these waves. We have 2 corrective waves within this pullback so far, and now we are kind of consolidating and trying to break out, going above that 20-period moving average, maybe leveraging that 200-day moving average as an area of support and trying to retrace higher. And I would say the first area of resistance is going to be around that $100 level if you do see a nice little power move to the upside. But if we do see a further breakdown and get that third wave, which is usually the most aggressive wave in a pattern or in a cycle, we do actually still have a gap that's down here pretty much between around $68 to around $73. Just be mindful of. Now, that would be an aggressive pullback. Obviously, you probably need to have another news catalyst in order to do so. But in the near term, we are seeing some a pretty decent consolidation, trying to push higher. MACD did cross in a bullish formation, 12 EMA above that 26 EMA, and we do have RSI kind of bottoming out within that oversold territory, making higher highs, higher lows for the most part here, trying to trend a little bit higher. So this looks like a pretty decent setup for a decent counter trend bounce, but just be careful if we do see a pretty decent breakdown. It could be fairly aggressive here.
It's ripping right now.
It is ripping.
Walmart's at $90, up 1%. It kind of looks like that. Can we zoom in a little bit? I love the 1-year chart with this megaphone thing going on, but I'm more interested in that area that you've got cordoned off that we just broke out of, right? Because that was like a pretty wide, long base there for 2 weeks. And I like to remind people that, remember, Walmart was one of the original dominoes that started falling for the sell-off. Because Walmart got hit on earnings.
That's true.
That was the top, basically.
And I was arguing it was not their earnings. It was like basically the broader, I think, fears over what the tariffs and the pricing environment looks like. Yeah, because they had solid earnings.
Yeah. KG, how about that little range breakout? Am I IDing that as a good base?
Yeah, I mean, it's a decent consolidation and you are breaking above that 20-period moving average. You just need follow through. I would say that the $90 level is kind of the upper end of that channel range. So it's not a complete full breakout yet. You probably would confirm that with prices hitting around $92.5.
Okay.
But with the price action today, who knows? It might actually happen. And the pullback is not really surprising. Walmart was trading at a tech multiple for a company that's considered to be a staple. And so I think it's also a valuation correction too that kind of aligns with that 200-day moving average. So, I mean, it does look like a decent chart setup here for, once again, a decent little rally,
nice.
Maybe up to around $100.
I know a lot of bulls in Walmart were frustrated by the big sell-off on earnings back in mid-Feb. So can you guess which stock I'm going to next, Jenny?
I would guess JB Hunt.
Nice.
Nice.
Because they're bringing the stuff to Walmart.
Exactly.
In the trucks.
They're they're a component of the story here, and they're an important one at that. And I know we've been in this like mass freight winter, which we've been saying that for I feel like years at this point. I don't know if we're fully seeing that right now played out, but Barclays reducing its price target. This is one of these non-committal notes. You got 165 from 180, so sure, it's lower than where they were, but it's also still above where we're currently trading substantially. So
they've been on the wrong side of this for basically since earnings.
Yeah, they really have. They kept an equal weight rating. They said this is part of their earnings preview for the transportation group. The first quarter results, they said, are likely to come in lower. Near-term outlook, of course, remains challenged as pull-forward subsidies, tariffs take hold, and freight rates remain tepid, in their opinion. They also said the economic warnings from FedEx and U.S. airlines are indicative of weaker PMI, setting the stage for a tough quarter of management commentary. I have so many thoughts on this because I read that entire airline downgrade note, I mean, like in depth yesterday. I mean, are airlines really right now signaling economic warnings? Or are we just saying that?
So we're talking about Diane. It's crazy how hard they sold off.
It is. And it's also crazy to me that all of this, even like the commentary from CEOs on these earnings calls for retail, they're saying there's like this consumer confidence that's waiting. But does that necessarily translate into dollars spent? We don't know that yet.
Yeah. I agree. JB Hunt kind of looking like price for recession too, but to your point also, kind of issues with trucking, for a while, and it's kind of been like a trucking stagflation environment for several years, a long time going, which is why the stock has gone nowhere for like 3 years.
Absolutely nowhere.
But this is a pretty fresh downdraft the last couple of months, KG.
Yeah, this one has been a tough one to really trade. If you looked at last year, to start off the year back in around April, we did see a decent gap to the downside here because of the commentary that you're hearing from earnings. But we did try to see like an ascending channel, right? We were making higher lows, making higher highs on a relative basis after the breakdown. And then we had a nice little pop up to $200, came back within that range, leveraged the 200-day as a moving average as an area of support. And then now it has broken down pretty quickly here. So maybe a little bit of a bear flag. So a consolidation that's taking place in a primary downtrend here. You have RSI that is trying to break out of this, triangle formation, if you will, maybe breaking out a little bit higher for a counter trend rally. MACD has crossed 12 EMA above the 26 EMA. So a lot of that's bullish for maybe a smaller pop here, but you really need to break through that 20-day moving average, which is sitting at around 151.56. And then your next area of resistance is going to be the 200-day moving average. I don't have it on the chart here, but Ollie, if you do break down from here, next area that you're looking at is about 120. So this is actually hinging on the longer-term time frame chart. This is kind of still in a island pattern, if you will, when it comes to prices over the longer term time frame here. So you'd like to see a decent little bounce. This is once again a company that has not only just seen a little bit of slowdown when it comes to freight in general, competition, Amazon's kind of hitting them as well, and then debt. A lot of debt has been eating into their margins. So the fundamental story hasn't been there. Technical story also doesn't look like it's been there either.
All right, sounds like one that is a pretty clear, already kind of maligned cyclical stock where if you've got a deep bearish view on the economy, boy, it probably is going to be rough go for JB Hunt, just given the price action and the message it seems already. All right, last one. We got something positive here in tech, Jenny?
Well, I guess, but I think this is a weird headline right now for Taiwan Semiconductor that, according to Financial Times, Taiwan Semiconductor's $100 billion U.S. investment pledge reflects intention, not promise, and said that this was merely an estimated price tag for an existing long-term plan and reflects an intention that is, again, not a promise, according to those familiar with the matter, which I just find to be very odd because, I mean, like, I feel like the company has outlined ways in which they are investing in the U.S. I mean, sure, we don't know maybe the exact dollar amount, but I thought that was pretty widely reported. I mean, the news was earlier in March that they will be investing now in the U.S. $100 billion. The investment will fund 3 of their fab plants and 2 of their advanced packaging facilities will be mostly in Arizona. It wasn't seen as a huge shock because they have this ongoing relationship with the U.S. And I think this is one of the most, I mean, ill-named when you think of like where they're located or what regions they're targeting. 69% of their sales is derived from North America, 12% is China, another 8% in the broader Asia Pacific region, and about 6% in Japan. So this is a widely
it's pretty diversified already, but a lot of U.S.
See, I thought that the rest of like we'd see China and then everything else would fall off, but there are substantial, I mean, like business doings right now with other countries, but U.S. is still dominating. I mean, we have roughly now more than 2/3 of their revenue, so we are the most important region to them.
Oh, yeah.
So
come home, Taiwan Semi. This is your new home. Come on in.
I guess that's what we're saying to everyone right now.
Yeah, land of the free.
Come on in.
As long as you're not selling us goods that you made elsewhere.
Right, make them here.
Come do it at home.
And then keep doing it.
Sounds like we are their home by proxy based on sales. KG chart, Taiwan Semi, what do you think?
From a chart standpoint, we are seeing it breaking down. I mean, last year we saw a nice little trend to the upside, and this is actually a company that trades at a very low multiple for an industry which they pretty much corner the market here. But we had a nice little trend to the upside. The primary trend is still technically holding because we had this really deep power candle to the downside on August 5th, but we were able to recover pretty much in one day. So if you use that as your primary trend line here, you're looking at 150 as your main area of support for this chart. But we did see a little bit of a breakdown, a consolidation, breaking below that 200-day moving average. We tried to go back and retest that back in late March, and then we failed again, failed below the 20-period moving average here. And right now, we're leveraging around that 158 level as an area of support. If we do get a bounce, I would look at that point of control, which aligns with that 20-day moving average of around 174. Spot 20 for your first area of resistance. Next one's going to be the 200-day moving average. Any further breakdown here, you're looking at around 125. MACD is trying to have a bullish cross here, but it just has not gotten that momentum. RSI was actually in a little bit of an uptrend, but also broke this trend as well. So I would be very cautious when it comes to this name, just overall, because just the technicals kind of signal that maybe it wants to go right back down to 150, really get some buyers to step in here and then try to move higher.
Okay. Look, it was a big winner, and it was that way all through the top, basically. A month before, essentially, no, not even that, like, yeah, I guess about a month before Taiwan Semi peaked, but I do think that if we are going to have like a big tech comeback, this has got to be one to watch. It's got to be at the top of the list.
I know, and unfortunately, right now, I feel like it's really wrapped up in like what its future with Intel looks like, and like Intel's remaining parts.
That's a good point, yeah.
Which I don't necessarily. I mean, again, that there's still many unknowns with that. I think you have to focus on Taiwan Semi, which is still an incredible business. I mean, as far as like their overall foundry, they dominate for a reason.
Yeah. Similar to NVIDIA, though, that's kind of been dead money for a while.
Well, yes.
TSM as well. Almost exactly the same return on the 1 year, 52 weeks, 20% roughly for both of them. Thanks, Jenny. Thanks, Kevin Green. Appreciate that, guys. Good look at the technicals here on some of the tariff-related stocks.